Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from OneSoft Solutions. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Brandon Taylor, Chief Operating Officer of OneSoft Solutions, which trades on the OTCQB venture market under the symbol OSSIF and on the TSXV under the symbol OSS. Welcome, Brandon.
Hi, Bob. Thank you for the introduction and OTC Markets for having us. Again, well, good afternoon, everybody, and thank you for joining. As Bob mentioned, my name is Brandon, President and CEO of OneSoft. OneSoft has built a SaaS integrity management solution for oil and gas pipelines. These are Fortune 50, 100, and 500 companies that operate in the midstream space of oil and gas, mostly transmission. The solution that we built is called Cognitive Integrity Management. You'll hear me refer to it in short as CIM. Today, we have over 15 customers who operate 188,000 miles of pipeline. I'd like to note some key points from the cap table here. In 2009, we raised $8.1 million. Today, we have roughly about $5 million. We have minimal debt. We incurred this from an acquisition we did in 2022. Insiders own 27% of the shares, making them very much aligned to shareholders, and there are 0 warrants outstanding. Before I begin, I'd like to remind everybody that certain statements in this call may be forward-looking in nature. These include statements invoking known and unknown risk, uncertainties, and other factors that could cause actual results to differ materially from those expressed or implied in our forward-looking statements. For caveats about the forward-looking statements and risk factors, please see the OneSoft MD&As for the quarter ended June 30th, 2023, and for the fiscal year ended December 31st, 2022, which can be accessed on company CDR and company's website. So a little bit about as I mentioned, OneSoft is a SaaS software company. We get a lot of questions. We don't provide hardware. We use Microsoft's cloud computing and machine learning to help oil and gas pipeline operators operationalize their data, to increase safety and efficiencies, and to really reduce the risk and cost to own and operate a pipeline. Essentially, we help these companies manage all of their assets, and realize their common objective, which is an industry objective of 0 pipeline failures. In fact, our mission statement is to predict pipeline failures to save lives and protect the environment with the assistance of data science and machine learning. Just to kind of give you a sense on how we're doing so far, I'd like to highlight the progress OneSoft has made in growing revenue over the last 7 years. This chart illustrates that Q2 was another solid quarter of revenue, up sequentially year over year. We are pleased to have been able to produce a compound quarterly growth rate of 74% over the last 7 years, and 55% fiscal 22 over 2021. In January, we provided guidance with forecasted revenue growth of 50% this year. One of the metrics that we use to measure success, and I'm going to talk about this further on kind of industry-wise, is the number of miles under subscription. These are agreements that we have with customers, typically multi-year agreements, and these are the miles that are outlined in those agreements. In our January guidance, we included miles under subscription and miles currently generating revenue. Last quarter, we added another line item, miles operated by customers. There are approximately 2.7 million miles in the US, and this represents the total miles operated by our customers. Today, we have roughly about 17% of the transmission miles and about 7% of the total miles in the US. In July, subsequent to the quarter end, we announced the addition of another customer, which will add another 18,000 miles roughly, and a 16% increase to our miles under subscription. We plan to continue to release these metrics for investors to follow kind of our overall progress. So look for these in future releases. These are our 15 hallmark customers. You can see these are Fortune, 50 in cases. We have 2 super majors. They're in the process of rolling our solution out across their international operations. But SIM is considered these customers' system of record for integrity management, creating quite a wide moat and lots of additional white space opportunities for OneSoft into the future. We've signed our first Australian and Canadian customers, and we're currently engaged in quite a few sales projects in international markets. It's kind of worth noting that some of our customers, there's a consolidation occurring in oil and gas, acquired other pipeline operators that we may have been working with independently before they got acquired. To date, 5 have been announced, which increases our pipeline mileage under contract and potential for future revenue. We've listed those in these slides here. We have a strong working, below the line here, we have a strong working relationship with Microsoft, specifically Microsoft Energy. We work out of the Houston Microsoft Technology Center quite a bit, and that's exclusively dedicated to energy. We have industry partners to where we've signed technology sharing agreements with, specifically CFR Technologies out of Edmonton, Canada, on our risk management module that we're building, and TL Anderson around crack management, the latest industry crack model for cracks on pipelines. So it just gives you a sense of what customers and partners we're creating relationships with. As this is a new conference that we've attended, I thought it'd be worthwhile to talk a little bit about the industry and some background about the markets that we are addressing. As I mentioned previously, there's roughly about 2.7 million miles of pipeline in the oil and gas space in the United States, which represents about 60% of the global infrastructure. Of that, there's 660 approximately miles are inspected using devices called pipeline inspection gauges. Industry calls them PIGs, is the industry vernacular. These are inserted into pipelines. They go into a launch valve. The product actually pushes them down the pipe, whether it's liquid or gas, and they collect data as they travel along the pipe using a variety of sensors that are along the device that seek potential threats of failure. From the outset, we decided to focus on the U.S. pipeline operators first, as they're highly regulated under DOT, and then specifically the Department of Pipeline Hazardous Safety Materials Agency. They require pipeline operators in the U.S. to run these PIGs every 5 or 7 years, depends on if you're doing liquid or gas. And the legacy processes to maintain these pipelines use on-premise software. About 80% of operators that we've run across are basically manage their integrity program using Microsoft Excel to store and analyze their data, which obviously in this forum is pretty disadvantageous for a number of reasons, right? Because on-premise you can't compute and accommodate big data. These these tools, these PIGs produce a lot of data. Most of the data collected, and as much as we can tell, about 95% of it in some cases is filtered out and not even considered for predictive analytics. Analysis is often limited just to a single PIG data set. These operators have been running these tools for decades, so there's really no efficient way for them to compare current to when the last time they ran this tool. And data is typically siloed. ILI, or the PIG data set, there's a bunch of other data sets around internal corrosion, so chemical, coupon, external corrosion, where they do direct assessments of the pipe, where they walk it. That's typically siloed and not accessible to operational tasks across the different departments. So you have your core integrity, you have a risk team, corrosion, crack, and geohazard type threats. There's no way for them to integrate this data and correlate it together across these different departments. And that really just contributes to the less accurate, more time consuming and costly data management and analysis, which greatly affects operational efficiencies. And to try to give you a sense on what we do that's differently, we put together a little video to basically walk through that. So rather than me talk through the technical, I thought what I would do is kind of just talk through what this does to industry. It's a born in the cloud solution. All you need is a browser, Chrome or Edge, any modern browser. It's a pretty revolutionary approach to this industry from a pipeline and data management perspective. In 2016, we launched out of the very first Microsoft data science and machine learning incubator. Phillips 66 was our first customer. As such, we harness Microsoft Azure's cloud platform to handle any big data and advanced data science. This allows us to ingest, correlate, track, and analyze 100% of the data that's been collected for decades for a really more comprehensive analysis. We're vendor agnostic, so that means that regardless of where this data is coming from, whether it's supplied by governments like soil types, weather or earthquake data, as you can see in our Azure maps, or data collected from pig vendors. This is a 3D illustration of a joint of pipe with multiple years of pig data on it. Third-party data or devices like SCADA, LiDAR, our machine learning algorithms can ingest it, normalize it, and align it, all of this data in a single platform, and easily, essentially at a push of a button, it all gets correlated. Without that automation and data ingestion and alignment, represents the bulk effort that the SMEs, the subject matter experts, integrity engineers that are customers spend most of their time on. With SIM, that data is no longer siloed, very accessible. SMEs who need it, core integrity, can do dig forecasting, they can do workload forecasting, as in these dashboards. We use Microsoft Power BI Embed, which is very familiar and has quite a large uptake with our customers, to basically help them across the enterprise track threats around compliance, digs, year-over-year budgeting, and various other anomalies within the system. The long and short of it is SIM provides greatly improved data management with advanced data science algorithms, and increases the efficiencies and safeties while really reducing their operational cost. In previous presentations, we've explained how we're following Jeffrey Moore's Crossing the Chasm model. In May of this year, we met internally and held strategic planning sessions. We always evaluate kind of where we are on this curve. At this stage, we believe we're in the bowling alley. We've crossed the chasm. We have customers and operators that would fall within that stage of this evolution. During our sessions, we tracked kind of new modules to help basically build those bowling pins to get to that whole solution. Really, our objective there was to rank these by total revenue opportunity, the time to that revenue, and the development effort to do that. This included corrosion, internal corrosion, which we launched last year. Crack management's another industry vernacular threat that they look for. That's launching Q4 of this year. And then we have risk management, external corrosion, and geohazard bending strain in development in private preview with a bunch of our customers. As well, operationally, we've transitioned our marketing and sales business processes really to focus on that economic buyer, with a strong emphasis on ROI and cost savings is kind of the compelling reason to buy SIM. We built a financial calculator that does both ROI and cost savings, and ROI is net present value, modified internal rate of return, etc. And then overall just cost savings from what we deem as their current state based on what they do today to a future state that involves SIM. We now use this throughout the entire sales process. We've also streamlined our internal marketing and sales business processes, application tools related to our CRM, our collateral, to really showcase the market share that we've garnered within industry. For as big as this industry is, it's quite small. They all talk, employees rotate across different operators. Really that shows the application proliferation that's happening within industry, and then just a general trend and adoption of SIM as the standard integrity management program within industry. As part of this session, we've started including a slide on AI, and we're really in the beginning stages of applying AI to the big data that we've already aggregated in oil and gas. We provided more information on this topic in quite detail on our MD&A, but we feel the reality of AI is relatively still in infancy, particularly in this industry. We expect, though, that to see very significant opportunity to leverage AI in our future as we aggregate more data across different data types, right? This will include, really information around that internal corrosion that I mentioned. When we do that, we expect that we'll be able to bring in chemical data, coupon data, sampling data. Our crack data models will help, expose different anomalies and threats that we can correlate to corrosion itself. We really think that once we're able to get more data sets in, that we're going to be able to leverage more of AI to do more predictive analytics. So for now, what we really believe it's really important for us to focus on that whole solution in Jeffrey Moore's model is get all the components and aggregate data. We've moved from SIM becoming, a specific thing to a data platform, and that's really to start kind of moving us into that AI model. The significant differentiator that we believe that we have is that really for the first time in industry, OneSoft is in a quite unique position in that we're aggregating the data across multiple operators. To date, roughly about 20 pipeline operators, which includes those operators that have been acquired by our existing customers. We've had 7,000 ILI assessments, which come from the PIGs, 98 million anomalies, etc. We really believe that for us to do AI opportunities, we need to have lots of data. And being on the Microsoft Azure cloud platform, we think it's quite logical for us to plug into Microsoft's Azure's OpenAI framework to start leveraging that AI once we have enough of that aggregated relevant that our data science team has proven to be relevant across these operators. So some highlights here. Management believes that we have very significant multi-year head start, not only just in the functionality that we've done, but really the born in the cloud. Our first 5 customers, the first 4, we were the very first SaaS solution in the entire enterprise. These are Fortune 50, 100, 500 companies. We still run across pipeline operators where we're their very first, they haven't seen a SaaS agreement. Our SaaS agreement's been through all of those operators, right? So we're not aware of another solution that's been commercialized to date worldwide that leverages cloud computing, machine learning, and data science. Really, the only competition that we run into still today is basically legacy systems or the processes they do today, which again is typically 80% is Microsoft Excel. So for us, it's mostly about change management and getting enough of that early adopter across so we start moving into that late majority, etc. One of the few things I'll point out on this slide, because you can read these bullets and you'll have the slide deck, is that access to data is really significant. It really hasn't existed. We've had other vendors that have been operating in this industry for decades ask us how we've got the data, the operators to give us the data. They do it because we're vendor agnostic. We're able to help share that learning across without sharing their data, those types of things. We like to say that we're the Google of integrity management within the midstream space, which obviously over time will leverage us into building a gas platform opportunity in the future. And specifically, we'll have to figure out how to monetize that as we go. Finally, I'd just like to say, we believe that the SIM platform has been established as kind of the de facto standard that leverages these technologies, specifically data science, machine learning platform for future AI, the next generation kind of for the industry. And with that, I'll wrap it up and go to questions. Okay, so If you'll go ahead and post your questions, I'll try to get through as many of these as I can. And then those that don't, OTC will do those and we'll get those back out as written. The first question that we have is, what caused the big slowdown in the signing of new customers in the past year? Are there any specific reasons? So this industry, as I mentioned, we've kind of crossed that chasm. We're in that early majority. That group of customers, the way we view those is they're really on ROI and economic buyers. So hence why we spent a tremendous amount of time to basically show net cost savings. Our data today shows that roughly we're saving them 10x what they do today, but a lot of it is Microsoft Excel based. So what we find is a lot of that is change management. That's slowly happening faster. But historically, it's been, some will be 18-month sell cycles, and those continue to be. A lot of the cycles that or the customers that we were working actually got acquired by our customers. We are in deals with those, so we don't want to discount that. We had 15 customers. We really got 5 additional just from them being acquired by our current customers, even though in some of those cases we were in those deals. We've really been trying to optimize and speed up the sales cycle, which is very difficult in a laggard type industry, but our legal agreement is rock solid. We're SOC 2 type 2, so the IT cycle takes a lot less time. It's really about managing ROI, cost savings, and change management. We think we have a really good process in place now in that early majority that we're kind of going to attack now. When will we be launching the risk module? We're in private preview right now on risk with 3 or 4 customers. This one's a little more difficult than the other modules we have in development today. And the reason I say that is mostly because there are already risk packages legacy in industry. They're built on what they call index-based models. The PHMSA organization is kind of getting guidance that industry needs to move more into a quantitative probabilistic based risk model. And that's massive change for the industry. When we signed up with CIFR, they have quantitative semi-probabilistic models. We've embedded those in the solution. Now it's mostly about educating and refocusing the industry on what that means. So we anticipate that by the end of the year, we'll have our probability of failure out with these customers, and then moving into next year. And then we have to hit their budget cycles. Typically, the way that industry focuses on risk today, they aggregate a lot of data. And for us, it's new data. So we've had to build the infrastructure to bring that data in. Once we do that, then we got to educate, but then they have to hit a budget cycle. So they'll run this time of year, they're aggregating data, they'll run it in January, and then they do it once a year. We're trying to change risk to be actionable. At the time you run these new PIG tools, that you basically can run risk at the same time. So you can really get your probabilistic risk models considering all data. So somewhere in 2024 is when we hope we can launch our risk product. Can you speak to the competitive environment, your IP portfolio, and total addressable market? Yeah, so competitive environment, when we launched the Microsoft Accelerator, and I've mentioned it a couple times, I think, in this call, today it's typically, these are highly educated mechanical engineers, chemical engineers that are integrity engineers at these pipeline within the integrity team, basically ensuring the integrity of the pipe. They leverage Excel pretty exclusively in that process, very comfortable in it. So we've been in the software for a long time, and typically it's, vendor A does this, feature, vendor B, how do you do it? We have yet to run into a deal where that is the sell cycle. It's typically, this is what we do, that's great, how can I change? So we still see no competitors in any of our deals that we go head to head with. It's typically what they do today. So those are legacy systems that have been in for 20 years on premise. How challenging is it for competitors to take over OneSoft's customers? So this industry is very slow. The sales cycle is very long, and it's very difficult to displace legacy solutions. Again, it takes years for change to happen. We feel very strongly about our moat. We've had no churn other than those where customers that were on us got acquired by another customer who was doing something different, and ultimately we think those will come back. But we've had no churn among customers, and we think our moat actually just keeps growing across the organization, specifically when we build out new modules. So really that's kind of where we are on that. When do you expect to reach break even? In January, we gave guidance that we would cross 10 million in revenue and cash neutral. We believe that we're still on target to do that this year. That's the guidance that we give, and we haven't changed it. How quickly have customers traditionally onboarded Miles versus the 5 to 7 years? So that's unique and pretty detailed. We get and what that really means, this is somebody who's followed the story for a while, is that when we onboard a customer, they may have 1,000 miles of pipe. Some customers may want to load all that miles because it's on a legacy system that they want to shut off. But traditionally, our model allows them, because they're only inspecting at 20% if they're a liquid line every year. So they're going to do 200, 200, 200 through 5 years until they get to the 1,000. Our model allows them to do the 200 they're going to inspect. Next year, do 200 more, and now they'll have 400 miles in the system onward until ultimately they get that. So that'd be a 5-year cycle. The one slide that I showed basically shows you kind of that percentage over time. So that's really the intent there, is to basically help investors kind of understand and maybe model what that looks like from that perspective. Can you speak about your progress in developing a procedure to inspect non-piggable pipelines? So one of our goals has been to address basically the 2.7 million miles. They can't run these pigs on the 2.7 because it's lower diameter, it's in different areas, different type of pipe. Our goal has been to basically take the learnings from the piggable and apply it. Again, that'll require enough data elements for us to build models that are applicable to the non-piggable pipe, meaning same type of pipe, same vintage, potentially the same coating, all of that kind of stuff. But the other thing that we can do in the short term and are starting to do is internal corrosion. So that's managing chemical that's on non-piggable pipe. Coupons. External corrosion will really open up that market because they have to go do what they call cathodic protection, electric current on the pipe, DC VG, AC VG, all that kind of stuff. That data set is coming in as part of our external corrosion, which will help open up that 2.7. And then risk management does all of it from that perspective. So that's kind of, again, why we're doing this whole solution, is around those modules to get to all of that data for data science and AI. There's been a lot of acquisition in the midstream. So I think we talked about that. Those miles, as they do that, depends on where we are on our quarter end reporting on whether or not they get incorporated in that one chart. So I can't remember which ones were recorded in Q2. But if they were known at the time of the Q2 release, we would have included those in our chart. What percentage escalations do you have in your long-term? Inflation might begin to eat into your profit margins. So not from the beginning. I think it's maybe been 2 or 3 years now. And then on renewals, typically our contracts run 3 to 5, 10-year cycles. In our SaaS agreement, we have an innovation escalator built into the contract. On existing functionality, just innovation escalator. And on our Azure cost, which is embedded into a one number for the customer, we have CPI or the innovation, whichever one's the greater of those two, to basically offset that comment. The current strategy is to build a full solution, but for the sales effort underway, are you focused more on smaller, larger? What's your process for focusing your sales efforts? So traditionally, we have focused on the larger operators. They typically have people and staff and current processes. The industry does have a bunch of pipeline operators. I don't remember the exact counts, but 1,000. They might be owned by PE firms or different that are less than 1,000 miles. There's thousands of those out there. We have worked on integrity as a service. That market's different. It's still a focal point for us, but typically they don't staff integrity engineers. They typically outsource that work, and they typically work under that, not under a SaaS agreement, but under a master services type of agreement. So our objective there is to basically continue to try to figure out how to attack that market. I think I just went past time. So thank you, everybody. I'll turn it back to John and the OTC board. And if we didn't get your question, we'll get it out.